Hey investors, welcome back to the Investing Iguana. I'm Iggy, and today we're diving into one of the hottest questions in tech investing right now. Should you invest in AMD stock? This chip maker just landed a massive deal with OpenAI that sent shares rocketing 25% in 1 week. But is this the opportunity of a lifetime or a trap waiting to snap shut? Before we break down this story, let me tell you who I am. The Investing Iguana is ranked 8th in the 2024 Influential Tigers by Tiger Brokers. We've hit over 1 million reads and 58,000 likes. We've produced more than 1,000 videos and accumulated 600,000 watch hours as of August 2025. We focus on US, regional, and global economic trends to help you make smarter investment decisions. This video is adapted from my latest in-depth Substack deep dive. If you want all the full charts, checklists, and written playbook, grab this post on Substack, link in description. Here's what we're covering today. First, we'll unpack the OpenAI partnership and whether it's a real game changer. Second, we'll examine AMD's financial performance and whether the numbers back up the hype. Third, we'll look at valuation metrics to see if AMD is priced for perfection. Fourth, we'll tackle the Nvidia challenge and competitive landscape. And finally, I'll share my personal take on the investment risks and opportunities. Let's start with the big news. Imagine you're a chip company trying to break into the AI accelerator market. You're competing against Nvidia, which owns over 90% market share. You've got solid products, but nobody believes you can actually win major customers. Then boom, OpenAI, the company behind ChatGPT, announces a 5-year deal to buy 6 gigawatts of your semiconductors. That's exactly what happened to AMD. This partnership could generate tens of billions in revenue over the next 5 years. Analysts estimate AMD's dollar content at more than $15 billion per gigawatt. The deal starts with 1 gigawatt deployment in the second half of 2026 and 2027 using AMD's MI450 chip that hasn't even launched yet. But here's the kicker. OpenAI gets performance-based warrants for up to 160 million AMD shares at a penny strike price. If AMD hits all the milestones, OpenAI could own 10% of the company. That's not just a customer relationship, that's an alignment of destinies. This validates AMD's AI strategy in the strongest way possible. OpenAI isn't buying AMD chips because they're cheaper. They're buying because they believe AMD can deliver the performance and scale they need for future AI models. That's a massive vote of confidence. Now let's talk about AMD's recent financial performance. Picture two sides of the same coin. On one side, you see record revenue of $25.8 billion for 2024, up 14% year over year. The data center segment nearly doubled, contributing almost half of total revenue. AMD generated over $5 billion in data center AI revenue alone. Fourth quarter revenue hit $7.7 billion, up 24% year over year. The company achieved a record 53% gross margin. Those are impressive numbers that show real momentum. But flip the coin over. Fourth quarter net income actually declined to $482 million from $667 million the previous year. Operating expenses jumped 17% because AMD is pouring money into AI research and development. The client segment grew 21%, gaming recovered with 22% growth, but embedded dropped slightly. The company is investing for the future, but that investment is eating into today's profits. That's the trade-off. Let me describe what the segment breakdown looks like. Data center brought in $3.9 billion in Q4 2024, up from $3.5 billion in Q3. That's 11% sequential growth driven by strong AI demand. Client revenue hit $2.3 billion, up from $1.9 billion, showing 21% growth as Ryzen processors gained momentum. Gaming recovered to $563 million from $462 million, with 22% growth from console sales. But embedded stayed flat at $923 million, down 0.4% due to industrial weakness. The story here is clear. AMD is winning in AI and consumer markets, but facing headwinds in industrial applications. Now let's get real about valuation. AMD currently trades at a forward PE ratio around 40 to 42 times earnings. Compare that to the industry average of 33.5 times. Nvidia trades at 53.7 times, but Nvidia has proven AI dominance. AMD is still the challenger. The company's market cap sits around $330 billion. Analysts have price targets ranging from $140 to $300. That's a massive spread showing deep uncertainty about AMD's future. Think about what these metrics mean. AMD's price-to-sales ratio is 11.2 times compared to the industry average of 9.2 times. The PEG ratio is 1.3, which is actually better than Nvidia's 2.1. AMD trades at premium valuations, but not extreme valuations. The market is pricing in strong growth, but it's also giving AMD room to prove itself. The question becomes whether AMD can deliver flawless execution to justify these numbers. Here's where the story gets tough. The Nvidia challenge. Nvidia doesn't just have better chips, they have CUDA, the programming language that's the industry standard for AI development. Switching from CUDA to AMD's ROCm platform is like asking a city to change from English to another language. It's possible, but incredibly difficult and expensive. That creates massive switching costs. AMD's MI325X accelerator shows strong technical capabilities. But here's the problem. AMD's current AI accelerators support maximum configurations of 8 GPUs. Nvidia can scale to 72 GPUs in interconnected clusters. For large-scale AI training, that limitation is critical. AMD can compete for inference workloads and smaller training projects. But for cutting-edge AI model development, Nvidia still has the edge. That's why the OpenAI deal is so important. It shows a major AI player is willing to work with AMD despite these limitations. Now for the risk and opportunity analysis, let me paint two scenarios. Scenario 1, the bull case. The AI accelerator market reaches $500 billion by 2028. AMD captures even 10% of that market, generating $50 billion in annual revenue. The OpenAI partnership leads to more enterprise customers validating AMD's technology. AMD's product roadmap with MI350 and MI400 closes the scalability gap with Nvidia. The company's diversified revenue streams from CPUs, gaming, and embedded provide stability. In this scenario, AMD stock could easily reach $250 to $300 per share. Scenario 2, the bear case. Nvidia's software advantage proves insurmountable. AMD's scalability limitations prevent meaningful market share gains. Margin pressure from heavy R&D spending continues to hurt profitability. Export restrictions cut $1.5 billion from revenue in 2025 as China sales disappear. Gaming segment volatility returns as console cycles weaken. The OpenAI deal takes longer to ramp than expected. In this scenario, AMD stock could fall back to $140 to $160 per share. Which scenario plays out? Nobody knows for sure. That's why AMD is a calculated bet, not a sure thing. Here's my personal take as Iggy. AMD stock is a compelling long-term opportunity for growth investors who can stomach volatility. The OpenAI partnership is transformative. It provides both validation and revenue visibility through 2030, but current valuations already reflect a lot of optimism. You're not getting AMD on sale right now. If you're a conservative investor, I'd suggest waiting for a better entry point. AMD stock will have pullbacks. The semiconductor industry is cyclical. There will be opportunities to buy at more attractive prices. Consider dollar cost averaging if you want exposure but don't want to time the market. If you're a growth investor with higher risk tolerance, the current moment could be attractive. The OpenAI partnership changes AMD's competitive position fundamentally. You're betting on AMD's ability to execute flawlessly over the next 5 years. That's a high bar, but the potential rewards are substantial. Here's what I'm watching. First, AMD's next earnings report and guidance. Do they raise forecasts based on the OpenAI deal? Second, updates on the MI450 chip development. Can AMD deliver on time? Third, customer wins beyond OpenAI. Do other hyperscalers start adopting AMD chips? Fourth, progress on ROCm software ecosystem. Can AMD reduce the switching costs from CUDA? Those 4 factors will determine whether AMD lives up to its valuation. The semiconductor story isn't simple. AMD faces real competition, execution risk, and regulatory headwinds. But the AI revolution is real, and AMD has positioned itself as the number 2 player in the most important technology trend of our generation. That's worth something. To wrap up today's deep dive, AMD delivered record revenue and secured a transformative partnership with OpenAI. But the company trades at premium valuations that demand flawless execution. The competitive landscape favors Nvidia's entrenched position, yet AMD's improving product roadmap and customer validation provide hope. For growth investors, AMD represents a calculated bet on AI infrastructure expansion. For conservative investors, patience might reward you with better entry points. Your investing journey is about making informed decisions aligned with your risk tolerance and time horizon. AMD might be right for some portfolios and wrong for others. That's the beauty of markets. We each get to make our own choices. If you found this deep dive valuable, smash that like button and subscribe for more investing insights. We're building a community of informed investors, and I'd love for you to join us. Check out our membership for exclusive content and deeper analysis. Next up, you'll want to watch my video on Nvidia's competitive moat and whether it's truly unbreakable. Click the card above or check the description. Until next time, keep learning, keep growing, and remember, investing is a marathon, not a sprint. This is Iggy from the Investing Iguana, signing off.